Hey guys, welcome. This is two. Welcome to the Fang Real Estate Show. We do this every week, almost every Sunday. To provide content and just provide information for our community, in particular about real estate because this is a real estate show. So every week, we have a guest that comes and we talk about all the movers and shakers and the people that are very active in our Hmong community that are real estate investors. I have them come and share their information, their story, and what they're up to, and see if we all can help each other out. So today I'm excited because this guy he invests in sort of the same space that I am, and he's doing a lot of stuff that I want to get to. So when I grow up, I want to be just like this guy. Um, but yeah, with that said, welcome to the show, and why don't you before that, before you introduce yourself, let me just let people know what the show's about. I mean, what the structure of the show. Me and the guests will talk, share information, things like that. After that, we will allow about 10 to 15 minutes at the end to answer any questions that you guys have. So if you guys are joining us here or on Facebook or on YouTube, which I put on our YouTube channel later, and you guys have questions, go ahead and leave your questions below. We'll try to answer at the end of the show, or on YouTube, we'll try to answer later if you guys leave any comments and stuff like that. If you're watching this on YouTube, please do like, share, and subscribe. To help the show, to let us know that you guys are interested in these type of topics, and so that we'll continue to provide these type of content for you guys. With that said, let's get started. Why don't you introduce yourself? 30-second introduction, your name, who you are, and what you do before you get into real estate.
Yeah, so thanks for having me too on your podcast here. My name is Lor Vang. I'm from Milwaukee, Wisconsin, and what I did before real estate, I went to school for mechanical engineering, and I'm still working as an engineer right now, more focused on sales. But yeah, that's pretty much me.
So how did you win, and why did you decide to do real estate stuff? Get into real estate at all? Why not stay at your engineering job?
Right. So, back in the great 2008 timeline there, I got unfortunate news that I had to be let go due to the economy. So then at that point, I kind of realized that, that there's got to be something that, a job is not a secure kind of thing. You have to have multiple sources of income. And so at that point, being laid off and my wife only being the only income producer, it was risky, but at the same time, there's like foreclosures all over. So in like 2009, we had found our first home, which is like $40,000 foreclosure. And we spent like everything that we had on it, like all our savings, credit cards, whatever. And we made it happen. We bought it cashed out. So.
Okay. Before we get to that, I think there's some backup. Before we get to that, why did you search for real estate? Like, there's a lot of avenues, especially in that I know you lost your job at that point, and I feel you about the job because I thought like my job was very secure too until like our governor we're on like the state grant, right? And then the governor wasn't signing the that budget that year, and then I was like kind of sort of let go for a little bit. And at that point, I also realized, yeah, my job is not secure. People might say you have a safe, secure job with I work for the government, so safe, secure job with the government. But when people don't sign a budget, like,
Yeah.
okay. But getting back to that, so I understand that part. But getting back to
like, so why real estate?
Yeah, why real estate? Why not like stocks? Why not like restaurants? Like, why real estate?
Right. So I mean, real estate. I've seen my dad in the past. We had one rental growing up, and I mean, he rented for a little bit. He was a landlord for a little bit, but he didn't like it, and he quickly got rid of it within a year or so. But then I also had other uncles that did real estate. They were like, little mom and pop landlords. Mm-hmm. And I kind of thought growing up, like even in school when I was in college, I was like, man, that, that's nice. You make good money on the side, but it's kind of like you think about the headaches and toilets at night, right? You're like,
Yeah.
nah, man, I can't do that. But you know, when the time comes down to it, it's like houses you have familiarity with,
Uh-huh.
whereas stocks you feel like you're kind of got to be an expert or something, you know,
Uh,
to do. But real estate, man, it's like if you want to be a landlord, if you know, it doesn't take that much. It's like a house, and you go rent it. I mean, it's pretty simple, right?
yeah.
Other
Especially
than headaches and
yeah.
stuff. Yeah.
Especially with single
So
family, right? Everybody
exactly,
has to
exactly,
have a place to live. Everybody knows how that works.
exactly. Yep.
You live in a house, you pay. You either pay or
Yes.
you're on the other side where you receive the money. So
Exactly. Yeah, you're
so
very comfortable with it, right?
yeah, yeah. All right. So before we get to your first deal, what does your portfolio look like right now? Yeah.
So right now I have probably about 115 total units or something like that.
115. Yeah,
Yeah.
see, 115 units. See, guys, this is why I wanted to be like Lore. Need to get there soon, man. Okay, let's go back to your first deal because I think that first deal is important for everybody.
Sure.
Especially some of the friends and community members here. Or all the listeners. Maybe they haven't done the first deal. Maybe they're not on their 100th deals yet, like you. So how do they? Let's talk about that first deal that you did. So you said it was a
Yeah.
foreclosure, 2009.
Yeah.
Yeah.
Yeah. 2009. Yeah.
So how did you
Yeah.
buy that property at that point?
How did I find it? Is
Yeah. How
that what
did
you
you
said?
find
Oh, so it was on the MLS.
it? Uh
It
huh.
was an MLS deal, and it was a deal that one of my brother-in-law was looking at,
Uh huh.
but you know he was so initially at that point in time I wasn't buying anything yet. We weren't even looking, but they had come across it and they were like, oh hey, you know, you guys want to buy a house, you know?
Uh huh.
And we're like, oh okay, see how much it is. You know, we walk through it. Oh man, it looks pretty decent. You know, just needs some cosmetics and whatnot.
Uh huh.
And it's ridiculous price, so it's like, you know, beyond 50% off. And I was like, oh
Yeah.
okay, yeah, we could definitely put this together.
So
So
so do you remember how
we
much?
did.
Sorry. Do you remember how much you buy it for?
Yeah, we bought it for 45K.
45K. And
Yeah.
was this in Milwaukee too?
Yeah, it was in Milwaukee. Yep.
Yeah. Man, I thought they're like $6,000 properties in Milwaukee, aren't they? So isn't this
There
expensive?
are, but those are the more, you know, rougher neighborhoods. You know.
Uh-huh. I was there
Yeah,
at
yeah,
Civic. Sean was there. He took us around.
yeah,
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 we looked at some of these
yeah.
6,000.
Oh
Uh,
yeah, there's still those available.
oh, okay.
They're still available.
Okay, so you bought it for 45K. What was the condition of the house? Like how many bed, how many bath, how
Sure.
much work did it need?
So yeah, it was 3 bedrooms and 2 full baths.
Uh-huh.
So
And it's
as far as work, it was just mostly cosmetic,
uh-huh.
just paint. Um, but you know, we being our first house, of course, we want to make it look nice, and we were planning to live there too. So
Yeah.
we, you know, looking back, we overdid it. You know, we put like ceramic tiles in the floors, and then we put granite countertops. It's like, you know, looking back, man, we spent too much money. But
Yeah,
you
I
know, it's
think
your first home. You're like, you know, you want to make it look nice, so whatever.
yeah, yeah. I think a lot of
Yeah,
people's first project or at least their home, they put a lot of like extra work and make it
exactly,
yeah,
exactly.
yeah,
Yeah.
spend a little bit too much. Um
Right, right.
so how did you fund this deal? Like how did
So yeah, I was telling you earlier. So we funded it from basically all of our savings at that point in our life that we were, you know, we were probably just what, like 5 years out of college or so, not even.
uh-huh,
And then we also loaned a bunch from our credit cards,
uh-huh.
and and then we just made it. You know, we said, well, we'll loan it, we'll get the down payment, we'll fix it up, and then we'll go to the bank and we refi it.
Oh,
You
so
know, get a
this
loan, basically get a loan on it, because if we cash it out, there's no loan, right?
yeah,
And then you go to the bank, you said, hey, cash me out.
yeah. Wait, so
So they appraised it. You
yeah.
know, they appraised it, and it appraised for like 100K or something like that, and we
Oh,
could take out 80% of that value.
yeah.
So we had 80K right there, and then we only spent 45K,
Yeah.
and you know, repairs and whatnot, it was like what, $5,000, $10,000 or whatever.
Wait,
So
so
then we
this
had some
deal,
extra money left after that.
yeah, this deal you actually made some money.
Oh yeah, yeah, yeah.
Oh, okay.
So basically, we did like a burr, but
Yeah,
we didn't even know that term yet. So
yeah, yeah.
yeah,
So
yeah.
what's that burr term? Well, what's that? What do you mean by
I
burr?
said buy, rehab, refi, rent, something like that.
Yeah, so you buy, you rehab it. So you
Yeah,
buy cash or hard money, however, like you
exactly.
did. Then you rehab it, you fix it all
Yep.
up, and then you rent it out. But in your case, you
Yeah.
live in it, which is sort of the
Yeah, I
same
lived
as
in it for
renting.
yeah, we lived in there for about 3 years.
Yeah,
Yeah.
and then after that, you refinance it, and so you go to the bank and you get a
Right.
loan on that, and so that's called the
Right.
BRRRR method, BRRRR. I think the Bigger Pockets
Hmm.
guy coined that term.
Right.
But that's awesome. That's like I'm a bird investor, and even on the multifamily side, it's sort of similar because this idea really is from the multifamily side, which we'll talk about it in a little bit. But you could use it in single family too. But you just have to buy right, and in your case, you did, and you made some money once you refi it. So that's
Right.
great. Yeah. So do you still have that property, or what's the outcome of that
I
property?
still do. It's part of my rental portfolio right now.
Okay.
So
So how much
yeah.
how much is that renting for now?
Rents for about $1,000 a month.
1,000, and then you have like
Yeah.
80 grand in it. So damn, I need to come to
Yep.
your guys' market.
Yeah. Come on in. I'm a realtor too, so
Oh
I'll help you
yeah.
out.
If I come over there, I'll let you know. We'll hang out. Um,
Sounds good. Sounds good.
I do wanted to come to your market. I was thinking, to come there and burr, to just buy and then after, because over there it works. The number works better than here in the Twin Cities. Um,
Mm,
and
yeah.
so in terms of rental,
Sure.
but that's good. So then after that first, well, before that, I'm always curious about this. Because Chai did the same thing, and my cousin Zach did the same thing for the
Okay.
first deal. It's sort of like an
Yeah.
all-in
Right.
mentality for
Yes.
that deal. So
Exactly. Yeah. Yeah.
how did you convince your wife to be okay with you doing that? I think that's a challenge for some of the people.
Uh, I don't know. I think it's just like your partner's got to trust you, you know?
Uh-huh.
And I guess really, I mean, I didn't have that much of a problem because she was the one that wanted to buy the house. So,
So she
so
convinced you.
she's like, yeah. So she still had a job, you know, she's a
Uh-huh.
nurse. So,
Yeah,
you know, that's more secure than, you know, what I had. So
yeah.
I was like, all right, well, I got some time on my hands now since I'm laid off. So I'm going to slowly fix it up. So I fixed it up for about 6 months, maybe. Took
Uh-huh.
my time watching YouTube and everything. uh, so and then luckily by the time I was done fixing it up, I was doing interviews and stuff. And I already got another job, so
Uh-huh. Okay. But
worked
that's
out pretty
good.
well.
I think that's important, to have our partner or spouse,
Exactly. Yeah.
along the ride with us, because it affects all of us.
Oh
Um,
yeah.
yeah. All right. So then you did this. You started a single family, your first deal, but
Right.
you moved to multifamily. So why
Yes. Yeah.
did you? Why not just keep doing a bunch of single family? Why did you switch over to multifamily?
Yeah. So what happened after that one, just real quick, is like we had some excess funds from that one.
Uh huh.
Like I did the loan, and then we still had some money left over. Like, okay, why not just go buy more foreclosures, right? So we went and
Yeah.
bought another single family, cashed it out with whatever money we had left,
Uh huh.
and then we basically rinse and repeat, you know. And we got another one, and then we ended up like right now we have 3 rentals, single families, and then I
Uh
was
huh.
just kind of coasting for a while because we
Yeah.
both had a good jobs. We had 3 single family rentals, and we're like, okay, yeah, we're just gonna sit like this for a while. But then I started listening on Bigger Pockets, like, oh, you know, like I was waiting for the values to go up, and I was like, maybe one day I'm gonna sell, right?
Uh
And
huh.
then
Yeah.
um, I was like, well, what's the next plan, right? What's the next step? And listen to Bigger Pockets, and all of a sudden these people start talking about syndication and apartments and
Uh-huh.
yeah, scaling up. And I'm like, man, what? Like my
What am I
biggest fear
doing?
was my biggest fear was like with single families is like I like single families because it's just one tenant.
Uh-huh.
per house, and so it was less headaches, in my mind. But that was like my limiting belief. But when I started looking to apartments, and I'm still listening to podcasts and all the guests come on and talk, it's like the numbers just really make sense because apartments, you run it as a business.
Mm-hmm.
You're not a mom and pop. You hire a property manager. You manage a property manager. All your units are in one location. It's easier for your maintenance team. Um, and the biggest thing is how multifamily apartments are valued. They're not based on comps. Your neighbors next door. Basically, you can buy sort of a underperforming apartment and
Mm-hmm.
just drive up the. Once you drive up the rents and get a higher income, and then you can get your apartment reevaluated, and basically it's all driven by your income. So
Yeah, yeah, yeah. That's why. That's kind of the reason why I went into multifamily too, right? It's you essentially run it as a business. It's essentially
right,
is a business,
it
and then
is a business. Yes.
yeah, and then it's dependent on the income. So basically,
Hmm.
the main source of income that comes in is the rent. So then, the only thing you really have to pay attention to is just that rental market, versus like the volatility of, the housing market, right? So that's sort of why I went in that direction. And then sort of the same thing, like what you're saying too, but like being able to scale,
Right. Right.
just having all that, the economy of scale kind of helps with that investing side.
Oh yeah.
Um,
Yeah.
yeah. So, what then you explain? How does a typical multifamily project structured? Just so that we let our listeners know how multifamilies are.
You mean like syndication?
Yeah, yeah. Well, what is a
Yeah. So
syndication?
yeah, what is a syndication?
Yeah.
Basically, it is a group of investors that pool their money together,
Hmm.
and then they put it into a main sponsor.
Yeah.
The lead syndicator. Um, they put it into his deal, and he manages. He's basically um, the guardian of their money,
Hmm.
and so they trust him with with their money to invest in an apartment. And really, the lead sponsor will find the deal. They'll put the deal together. They'll do the due diligence.
Hmm.
They'll put together like a property manager. They'll find all the financing. They'll take care of all that and purchase a property and then run it. So
Okay. So then on there you said like the lead syndicator or the sponsor. Like what's that?
So yeah, the sponsor is doesn't necessarily mean one person per
Uh-huh.
se. Sponsor can mean like a group of individuals. So like maybe two or three like key people that will find the deal, fund the deal, and close the deal and manage it afterwards. And then of course the people who put in their money, the limited partners,
Hmm.
um, they'll get payouts, whether it be quarterly, semi-annually, or annually. It all depends on the deal, how it's structured. Your payouts are based on how much money you put in, so it's all proportion to
Uh-huh.
whatever you invest in.
Yeah. So typically, like the limited partners or the team that you know, the limited partners are the ones that provide the investment funds, typically, right? And that,
Correct, but the sponsor can also put in money too, and they
yeah,
should.
yeah.
Yeah.
So should you find a sponsor that don't put? Should do you recommend finding a sponsor that put their own money in the investment as well?
Yeah, definitely. As a limited partner or passive investor, as they call it,
Hmm.
um, you should definitely find a sponsor that has skin in the game.
Yeah.
Because if they don't have skin in the game, then you as a limited partners, you're probably thinking, oh, he's just playing with the house money. Yeah. So
So then why should you because I think a lot of people ask this question. Why should you put your money in a pull your money together in a group versus like you using that money to just buy like maybe a duplex or something versus like owning part of like 50 unit or what why would you decide to go with a group instead of just doing it yourself?
yeah, so I think a couple of reasons. One is, if you don't have the time
Yeah.
to manage a duplex or a single or a quadplex, or you don't care to manage anything. You know, you have a good job, good paying job, you got a lot of money, but very little time. Time is valuable to you.
Yeah.
So if you're a high net worth individual, you know, and all you want to do is get return on your income, your problem is you have too much money, but you have nowhere to invest it,
Yeah.
right? So that would be a great example of a person to be a passive investor. You don't have time to be finding deals and doing on the underwriting. So you just want to put your money with somebody who's proven and make your money grow. So
Yeah.
another reason would be, real quick, another reason would be um, you can't, as an individual, you look at an apartment, right? Like a 100
Yeah.
unit.
Yeah.
How does one person buy that by himself? You just can't, right? I mean,
Yeah.
it's like
Well, unless
2
you're
million,
unless you're unless
million
you're Grant
dollars.
Cardone or something.
Exactly. Or, you know, or Chai or somebody like
Or
that, right?
try, yeah, or try. Yeah.
Yeah.
Yeah, Chai did
So
buy.
basically
Yeah.
power numbers, you know?
Yeah, yeah, yeah. Yeah, exactly. It goes to that what we were talking about earlier with, like some people are scared to buy, like your dad decided to let go of some rentals because when it's small, you can't really afford, I mean you can, but then it doesn't really make sense. You can't really afford like good property managers, when it's like 1 or 2 units or a duplex or something like
Right.
that. So you have to deal with the tenants yourself, essentially, and maybe you don't have time to do that, or like in your dad's case, he doesn't want to do that. So
Right.
when you
Right.
go into these larger deals, then the management is built into the business, and so
Exactly.
even if you want to, you can't manage a 50 unit yourself. Even if you want to, you can't manage a 100 unit yourself, right? So
Right.
you're working with professional property managers, or most like 100 unit or so, you're probably gonna have on-site managers. So it's
Exactly. Yeah.
it's more safe in that sense. Okay, so most how are what's the current like multifamily deal that you did? Can we talk about one of your deals?
Oh yeah, sure. So the first syndication deal that I did last about a year, actually, it's
Uh-huh.
like a year ago in October. Um, so it's a 92 unit apartment in Dallas,
Uh-huh.
um, and it was part of a. I'm a passive investor in this deal, so I found the lead sponsors, and I kind of built a relationship with them. I've been following them and tracking their success,
Uh-huh.
and so then I seeing that they were doing lots of deals and closing and selling deals, and I was like, these guys are pretty legit. So what happened was I was doing a apartment conference
Uh-huh.
that I went to, and I met up with one of the lead sponsors there. At the time, I just met him. I didn't really know anything much about him, but we connected on Facebook and we kept in touch. And so I just kind of been watching them from afar.
Yeah.
Um, and then I reached out after I saw their track record. I'm like, dude, I've seen you do a lot of big things. Let me know if I can get it in on the next deal that you got. He's like, sure, man, I got you. Like, and 2 months later, he's like, yeah, we'll have one coming up. Be ready.
Uh-huh.
I was like, okay. So basically, as a limited partner, I mean, you got to buy in, right? So you got to have some of these deals um, as low as 25K. The average is 50K you got to put in,
Yeah.
and every single deal that has different number of returns,
Uh-huh.
and every deal is kind of structured differently.
Yeah. So for this deal, why it's 92 units, why did you not, I mean, why didn't you go find your own deal? Why invest with this group and do it passively?
Sure.
What was your thought
Yeah,
process
great
behind
question. Yeah.
it? Yeah.
Yeah. So really, I mean, like I was saying earlier, apartment. If you drive around, you just look at apartments, and the bigger they are. I mean, you kind of think in your head like, how is somebody like me, an individual, ever going to buy one of these things?
Uh-huh.
Um, and the whole apartment game, the commercial real estate game, is entirely different than residential. It's not as easy as just calling up a broker and, hey, go show me this apartment thing. I want to go buy it. It ain't that easy. Um, the whole commercial game, it's
Yeah.
like there's really no MLS.
Yeah. Yeah.
The apartments that you do see that pop up in the MLS, those are pretty much garbage deals,
Yeah. Yeah.
straight up garbage deals, or way overpriced.
Yeah.
Nobody, nobody that knows anything is really gonna go buy those.
Yeah. Yeah.
So it's very hard to be legit in front of a broker because they sell like $1 million apartments all day, and it's like, are they really gonna talk to you? Um, do they really trust you that you're gonna close? Do you have the ability to close?
Yeah.
Do you have $2 million for down payment?
Yeah.
That type of thing. When they ask you, oh, send me a proof of funds first
Yeah.
before I send you more information. Where are you gonna get a proof of fund for $2 million or whatever, $10 million? you know.
You call child.
So exactly, they weed you out. They'll sniff you out if you're a newbie.
Yeah. Yeah.
So it's very complicated. And even when you do have all that money in your bank, the relationship thing, it's
Yeah.
crazy. It's like if a broker has done business with you before and they know you can close,
Yeah.
and even if there's somebody else that bids higher than you, you know who they're gonna go to? They're gonna go to you. They're gonna give you the winning bid. They're
Yeah.
gonna say, all right, I know this dude. We've done X amount of deals.
Yeah.
He's
Yeah.
gonna get the deal. And it's
Yeah.
very unfair, but that's how it is.
Yeah. And a little thing on because I'm a commercial agent, so a little thing on our
Yeah.
side is that the reason a lot of broker in the commercial space, there's no really buyer's agent. It's the agent
Right.
agent
Right.
we really represent the seller. So
Right.
there's no buyer's agent. And yes,
Yep.
it is our job to like find the best and highest price for that property that they want to sell. Okay, a lot of times these are multi-million dollar deals, right? So yeah, we want to find the best deal, but also these things takes time. Even multifamily, it takes like 60 days, very typical, right? That's quick. Is
That's
60 days
quick.
quick?
Yeah. 60
Yeah,
is quick. Yeah.
60 days is quick. So
Hmm.
a lot of time we want someone that is able to close to our client, and the seller wants someone that's able to close too. So it's not that, oh, you have a lot of money and we're gonna give you all the information. We want to give information out to people that could close. So if you have no track record like us, starting out, it's like it's difficult to build that
Exactly.
track record ourselves and close on these
Right.
multi-million dollar assets, these
Exactly.
multi-million
Yeah.
dollar deals. So it's good to start with the group like what you did.
Right. Yeah. I mean, not only that, I mean, just to attract, how do you attract passive investors if you have no track record? They're
Yeah,
going to ask you, oh, what have you done?
yeah,
I got a couple of single families. They're gonna be like, what? They're going to laugh at you, right?
yeah, yeah,
So, yeah.
yeah.
And same with banks, like mortgage loaners, commercial banks. When you talk to them, to get the best bank loans, you have to have a track record. You have to have, they call it what is it? The best loan package out there is
Yeah,
Fannie Mae, anything above $1 million, non-recourse.
yeah,
Um, and to get that, it's kind of like a catch-22. You have to already have gotten it before to qualify for it. So
yeah. It's
how do
that
you do that?
chicken. It's that
Yeah,
chicken egg problem, right? It's like
exactly, exactly.
what
So
comes first? Um,
yeah, yeah,
okay, you mentioned like Fannie Mae. I mean, these are agency. They call it agency debt, right?
agency debt,
So,
yes.
what is that? And kind of explain why is that the best type of loans?
Right. So uh, Fannie and then the other one's Freddie, small
Yeah,
balance.
yeah.
The key part is that they're non-recourse loans. So um,
What does that
meaning
mean?
that
Non-recourse.
if you default on it somehow, you can't pay your mortgage, um, they're not going to come after you personally.
Yeah,
And they just take your building and that's it.
yeah.
So everything that we get residentially, it's all recourse. So make sure you guys pay your mortgages up there.
And the reason that it's non-recourse, and these are usually $1 million plus the loan deals. And
Exactly. Yeah.
yeah, the reason it's non-recourse is because they know that most likely, even if they come after you, they're not gonna get anything from you because most people aren't millionaires yet, right? And then on top of this, so then because of that, on top of that, when they underwrite these deals, they really look at the asset. They look at the sponsor team too as well, but the asset needs to make sense for them as well because it's non-recourse. So the only thing that they have to back up their loan is just the property or the asset itself, right? Hello, can you still hear? Internet's disconnected. I think Laura left.
Yeah.
Can you hear?
Yeah, I'm still here. Yeah. It is leggy though.
Oh, okay. Yeah, something popped up. That's okay. Can you hear me now though? Then
Yeah, I can hear you now. Yep.
okay, yeah. Um, yeah, okay. So, I mean, these agency debts, I mean, also that you get better amortization, right? I think most of them are 30-year amortization.
Correct. Yeah, most of them 30 years, and now the popular thing is interest only for the first couple of years, and
Yeah,
that is like crazy. You only pay the interest only. You don't pay principal yet, and
yeah,
they'll kind of like push it off
yep,
for maybe 2 to 3 years is typical right now.
yeah, yeah.
So,
But then these type of loans, they needed to be more stabilized, right? I think 90 something percent occupied.
correct. Yes, they want stabilized properties. Yeah, about 90% and above, I believe.
Yeah,
So
yeah. So then sometimes in multifamily we buy properties that are not stabilized. So how are you gonna be able to you know I mean how do you get agency debt on that?
right. So what happens is people get bridge loans,
Yeah.
basically just a regular loan with any other bank that's willing to take the risk, and of course that comes with a higher interest rate,
Uh-huh.
maybe a shorter loan term.
Yeah.
So before we get a lot of people who don't know about commercial loans, they're short-term loans.
Yeah.
They're anywhere from 5 to maybe 10 years only.
Yeah.
10 is like if you're lucky. So it's not anything like residential where you used to like 30-year loans.
Yeah.
Um, I mean they're amortized for 30, but they have a balloon at like
Yeah.
5 to 7. You gotta pay the full amount.
Yeah.
uh,
Well,
yeah, so that's why with apartments, I mean the exit strategy is you go in, you buy a value add apartments deals.
yeah.
You're kind of trying to fix it up, make it look nicer, bump up the rents, and then after about year 5, you start looking at selling it and exiting.
Yeah. Yeah.
Nobody really holds apartments for long term.
Yeah. Yeah.
So
Or you refi it
or you
out.
refi, yes,
Yeah. Yeah. So
correct.
see,
Yeah, you refi. Yep.
yeah. So see, that's exactly the burst strategy, right? So that's why I said it kind of comes from apartments, like because in apartments, multifamily, you buy like a undervalued asset, something that maybe it's around 80% occupied, so then you fix it up, you make it look pretty, you put tenants in it, so you make it more like 90ish 95% occupied, and then
Mhm.
but this takes you maybe like 2 to 5 years, right? 2 to 3 years or whatever the business plan is to value add this. So in between that transition you might take something like a bridge loan or something like that, and then
Correct.
maybe
Yeah.
3 years down the road everything's more stabilized, you'll refinance it to a more long-term debt like
Like Fanny. Yep.
yeah, yep, exactly. So
Mhm.
that's why I said the Bird method really comes from multifamily, but you apply it to single family or 1 to 4 residential units as well. So
Right.
that's exactly what I'm doing for my residential units, and transition
Okay.
to multifamily.
Yeah.
Okay. So since you're passive income on this deal, this 92 units, what's a typical
Mhm.
ROI on this? Your return on investment.
Yeah. So
Mm.
when I invested in this deal, the offering package
Uh-huh.
said that the cash on cash returns would be about double digit. So they said above 10%.
Uh-huh.
So they don't really give a number per se, but
Yeah.
I mean anyway, like you can't really guarantee
Yeah.
a
Yeah.
number. Nobody can go. If somebody's gonna guarantee you a number, they're lying. Don't believe them. Per SEC, the securities, government, you
Yeah.
can't guarantee people anything. An investment, they tell you right away when you invest, there's no guarantee you're going to make
Yeah.
money. There's a guarantee you might lose money. you know, they tell you
Well,
all the different ways you could lose your money.
yeah, yeah, yeah.
But no, you can't make promises and guarantee people anything.
Yeah, okay.
But they'll run the numbers and they'll project that, okay, hey, this deal we're thinking we're going to make 8 to 10%, whatever. And right
Yeah.
now, 8 to 10%. I mean, 8% I think is like the average right now
Yeah.
that
Yeah.
I'm seeing
Okay.
in apartment deals. You
Yep.
might find 6%, 4%, but
Yeah.
those are more like Class A,
Yeah.
which means very new build. But yeah, man, my specific deal was looking at about 10% cash
Yeah.
on cash per year.
Uh-huh.
So if you think about that, my deal, you had to pay $50,000 minimum to get in.
Yeah.
So 10% of 50K, $5,000 a year
Uh-huh.
and then the exit strategy is 5 years.
Okay.
So basically promising you 5K per year for 5 years.
Mm-hmm.
And then, so that's 25K. And then they were saying that they were projecting that when we exit in about 5 years, that you basically double your initial investment. So
Yeah.
50, and another 50 plus a 25, so that's 25K that you would get back for your 55K for your
So
initial 50K.
yeah, so see that's the great thing about multifamily, right? People sometimes they get hung up on this, like, if I do it myself, I could like get, 20% return. And in these multifamily deals, you're at 8 to 10, maybe 12, But at the end, when you exit at 5 years, overall, when you look at it, you're almost at like 150% return on all your investment, right? Yeah.
Oh yeah, yeah,
Yeah, so
yeah. I
that's
mean,
the game plan. The game plan is to have these cash flow coming through, and then your initial principle, like what Warren Buffett said, right? Don't lose money when you invest. So in these deals,
yeah,
they're large enough where they're kind of protected and almost recession proof as well, because people need a place to live, right? And
right,
so
right.
your principal is pretty much protected, you know, and so the
Yeah,
down, yeah. So your principal is protected, and then you have a chance to make about 100 something% return on your investment. So
right. And the key thing is you're passive. As a passive investor,
yeah,
we didn't talk about this earlier, but you have zero responsibility really.
yeah,
You're not in there talking to tenants. You're not in there screening tenants. You're not there picking up phone calls about the
yeah,
toilet. All you did was put your initial um, investment amount in,
yeah,
and you just watch it grow, and then you just kind of get your monthly or whatever cash on cash return portion
yeah,
of the rent,
yeah,
and then when you exit in five or so years, you hope that your property has been well taken care of and the
yeah,
plan works. And you
yeah,
exit with maybe close to double what you put in. So
yeah,
yeah,
yeah. And and a lot of time you're able to double because rent naturally will just increase, right, over time. And so
right.
that even if you add value on top of the regular annual increase, that's going to dramatically increase the value of your property because it's based on the income that's coming in, right? So that's why you're able to
Yeah.
exit with, 150% return on your investment, right?
Exactly. Yeah. Yeah. Other things you can do, not just increase the income, but decrease your expenses.
Yeah,
So a lot of people go in, they put in more efficient water systems, more efficient light bulbs, and they decrease their expenses a lot. And by decreasing your expense, then you've got more income. So
yeah, yeah, exactly.
yeah.
All right. So that's awesome. So it's been a year something that you've been doing. You're in this deal.
Yes.
Anything that you learned so far being a passive investor in here?
I would say that no plan goes as planned.
Uh-huh.
um, there's a couple surprises that popped up. Our roof apparently was a little bit worn out, and
Uh-huh.
in some of the buildings. So instead of just doing like a patch repair, they just decided, and you know what, we might as well just fix everything, put brand new roofs on it. It's a flat roof.
Mm-hmm.
So it's like a rubber membrane type of thing.
Yeah.
So they just went ahead and repaired all the roofs and made it look real nice and everything.
Did,
So
did
that
they
was a
have to
kind of a
do a
big.
capital call on that, or they
No,
had
they
like
did not.
reserve?
No.
Oh, sorry.
But it did take a hit. It did
Uh-huh.
take a hit because they're not basically they're not going to pay out anything for a couple months.
Uh-huh.
Uh, so to help cover some of those repairs.
Okay.
So yeah.
Okay. Yeah. So they didn't do a capital call, or they didn't
No,
ask for more money. Okay.
no. What they had called for enough capital up front to have.
Uh-huh.
They had already were conservative, and they already had capital reserves planned ahead.
Yeah.
So part of the money that we gave up front was already part of those reserves,
Uh-huh.
and we had enough money to cover that. So
How
yeah,
how how did you guys leverage it? 60%, 65, 70, 80? What was the leverage
you
on
talking
it?
about the loan?
Yeah, the loan.
The loan was 2080, so 20% down.
Oh, okay. Oh, that's pretty
Yeah,
that's pretty good.
yeah, it is
It's
pretty good. Yeah,
it's even right now sometimes it's hard to find like 20% down deals. So
yeah, yeah.
yeah, yeah. All right. Oh shoot, we're already at like 50 minutes. My bad. I just asked. I still have a bunch more questions to ask you, like how it's split,
Oh, go ahead.
usually, all that stuff, and what prefer rates that they do. But if you come back, we'll talk more about that.
Sure.
Because I think
Okay.
we could talk about it forever. So, um, what's
Sounds
your
good.
what's next for you? Like, are you gonna be a general sponsor on your own deal next, or what's your plan?
Yeah, yeah, exactly. So for me, um, one of the reasons I did passive, like you had asked me earlier, instead of going on my own, well, like I said, I have very limited experience, right? So one of the ways to get experience is to be a passive.
Uh-huh.
You ride in the back seat, you watch, and you're part of a deal, and you've got something to add on your resume that hey, I have a 92 unit apartment.
Uh-huh.
I'm even though I'm passive, I still have some credibility, better than somebody who has none.
Right.
Um, and so I'm learning from these guys on how to communicate with your passives, um, how to put together an offering deal, and
Mm-hmm.
um, so I'm kind of learning the ropes. But yeah, my goal in the short term here is to syndicate my own deal, be the general sponsor,
Yeah.
and some ways I'm doing that is I'm starting up a local meetup where I'm at. Trying to educate people, get them more knowledgeable and aware that hey, there's other ways to invest in real estate,
Yeah.
not just flipping a house, not just wholesaling, or having a rental. There's syndication, and
Yeah.
if, like I said earlier, if you're an individual who's very busy but you have a lot of money to spend, and you can get a better return with the syndication, 8 to 10%, maybe even 12, and then you double your money after 5 years, and you basically do zero work. You're just putting your money in for the ride,
Yeah.
and after 5 years, you can't double your money. So why wouldn't you do that? It's just a different way to diversify what you invest in.
Yeah. Yeah. Yeah.
Yeah. So even
And,
if
and
you
to
are,
me, I just
yeah,
feel that it's a lot more stable too. This rental side of the
right,
uh,
right.
and,
So
yeah.
yeah,
So you said your group is your group local in Milwaukee, or your meetup.
yeah. Yep, my meetup is local in Milwaukee where I'm at. So it's called Milwaukee Apartment Investors on Facebook. If you
Uh-huh.
want to search it,
Oh, okay.
I share articles all the time about just general knowledge on syndication
Yeah.
and the state of the economy and things like that. So
Yeah, yeah, yeah. Man, and I say if you want a recession proof, I mean we can't really say that it's guaranteed, right? But if you want to move some of your funds to a more recession proof type of asset, I think multifamily is one of the consideration that you should look into. I know.
right, right, yeah. One of the things we didn't talk about is like a great way to do it is you can actually, if you have a IRA that from a past employer,
Yeah,
that where you got a lot of money sitting somewhere in a self-directed IRA, or like a Fidelity or whatever, you can roll it into a self-directed IRA,
yeah,
which then you don't need to invest in the stock market. You can take that and you can invest it in a syndication. So
yeah,
if you've got say 50K in IRA, you can take it out,
yeah,
put in a SDIRA,
yeah,
and you can there's some providers out there if you're interested. Reach out to me later on Facebook or whatever. And you can basically put that in an apartment syndication as a passive. Now with the IRA, you cannot invest in your own deal. So those of you who are trying to like even go and buy a single family, and then somehow fix it up and whatever.
Yeah, can't
That
do it.
doesn't work. You can't. Yeah, it's like what is it? Um,
Uh, it
it's
can
like
be it can
self-interest.
benefit.
Conflict of interest.
Yeah,
Yeah, it's a conflict of interest if you're
yeah,
like
yeah,
trying to invest your IRA funds into something you're doing yourself, where you're actively managing or have
yeah,
a hand in how it does. So a passive apartment deal is a way to get around that.
yeah,
And at the same time, you're not doing much work at all. So that'd be a great way
yeah.
to get started. So,
I think the figure is like I think in the U.S. it's like $9 trillion in these retirement plans, right?
oh yeah, yeah,
Yeah. So
yep,
all I know all the Hmong people, even if you're not Hmong, all of you guys, most of us have retirement accounts, and so if we're able to move into a self-directed, individual retirement account, then we could use that to invest passively in assets like this, and
yes,
all you have to do is find a great sponsor that you trust, and
right,
you have the ability to double, triple your return, right?
exactly.
Oh, okay, that's good. If they want more information, they just reach out to you. I think you.
Yeah,
I've been following you for a while, so I think the last time we were supposed to meet up at that conference here.
at the conference, yes,
Yeah,
yeah,
yeah. I had something come up, so I couldn't come.
yeah, no problem.
Okay, let me go to yeah, it took longer than we thought. I mean, it went by quicker than I thought. Um,
Yeah, time
So we're
flies.
already, yeah, we're already at the hour, but can you stay maybe 10, 15 minutes, answer some questions?
Yeah. Let's go through the questions real quick,
Okay.
and
All right.
see what
If
everybody's
you
got.
guys are joining us, if you guys are just joining, we're at the question phase now. I'm with Lor Vang. He's invested in over 100 plus units, and so in particular, in the multifamily space. So if you guys have questions for him, go ahead and leave a comment, and I'll ask him some of these questions. Okay. I'm gonna start with the questions that I posted the other day. So let me see. Let's start with the big guy himself, Chai Hyung. He says, "What do you think about the Milwaukee market? Would you invest in apartments in Milwaukee?" Since you,
Yes, I would.
yeah,
Yes, exactly. Since I live in Milwaukee, I would, as I'm here. But what I think about the Milwaukee market, it is
uh-huh,
overpriced right now.
uh-huh,
That's a common thing with the apartments right now. A lot of the cap rates are compressed, so meaning that they're overpriced in general. A lot of markets overpriced. So
uh-huh.
I think Milwaukee's one of them.
Oh, okay.
But if I can find the right deal, which I am looking in Milwaukee, looking and evaluating numbers and underwriting. But if I can find the right one, I would do it.
Yeah, yeah. I think he wants to invest with you there, man. he,
He's already got an apartment here.
he's gonna trade up. He's gonna trade his 12 units and roll over
Yeah, I
to
love
your
him.
yeah.
Child will be first on my list of investors I hit up.
Yeah, for sure. All right. Tali says, what was your starting capital in your investment career? I guess. Um,
Well, yeah, I covered earlier, but basically just our savings account. At that point, we had like what $15,000 cash in our account.
okay.
Not much for young individuals, but then the rest of that was basically we jumped off a cliff and said, "Hey, we got these credit cards.
Yeah.
Um, let's go use them." So,
See, that's the
and
right way to use credit cards to
there
help
was
you.
0% too. So
Yeah, yeah.
at least
Oh,
for a
that's good.
year. So
Hey,
we said, hey, we got a year to fix this thing up
yeah,
at the
yeah,
refi.
yeah, yeah.
So
I
make it happen, you know?
I still use credit cards on my rehabs and stuff right now.
Oh
Even
yeah,
though I
yeah.
have money in the bank, I usually put it on the credit cards and then pay it off.
Oh
So
yeah. I mean, we had like we opened up a credit card with Menards. We opened a credit card with Home Depot.
yeah.
Yeah.
Let's see. What are Totally asking him? What are the certain criteria that a property must meet before you decide to purchase them? So what are your criteria?
So yeah. So for I mean, I think we're talking about multifamily. So
Yeah.
market, definitely choose a market where there's jobs, where people are growing.
Hmm.
With apartments, you want an apartment where the population is growing, right? You don't want to invest in an apartment in a market where everybody's leaving, like Detroit, you know.
Yeah.
Um, so you got to have the demand, right?
Yeah.
So second, they have to have jobs. You don't want to invest in a market that has just one or two major employers.
Hmm.
What happens when those people leave? That when that company leaves, everybody's going to scatter.
Yeah.
Um, and then also a landlord friendly state.
Okay.
So when you have problem tenants that don't pay up, it does not take a whole year, 6 months, whatever, to evict, right? So it's got to
So no
be landlord
California.
friendly.
Yeah. So no
Yeah, exactly.
California.
No rent control stuff, that type of thing. Uh, so yeah, I mean that's about it. And then you have to know what class of property you want.
Yeah.
Um, yeah,
What do you
that's
look at? Are you more like C, B's or A's? What do you look at?
I'm more of a CB kind of guy.
Okay.
Yeah,
Yeah.
yeah.
So what?
So yeah,
Explain what sort of these classification means. I'm out of water, so
sure. So A is pretty much brand new property,
okay.
recently built. So I'd say like even 3 years or newer, whatever.
Yeah.
Um, B is a little bit older than that, so maybe 3 to 10 years.
Yeah.
Um, and then C is, 10 plus to 30, something like that.
Yeah.
And then D is what they call the do not buy areas, the war zone areas. So the ones that you got to pick up rent with a gun, that type of
Yeah.
area.
Yeah. Yeah.
Yeah,
Yeah. Don't you
yeah.
guys have some of those areas in Milwaukee too? Some D's areas?
Oh, we have a lot of those. We have a lot.
Uh, See, that's the
So,
thing that I need to really research Milwaukee. I mean, I wanted to come and do some investments over there, but I really need to, maybe I just need to come hang out with you more. I really get to know that market better because,
well, yeah, that's the thing. I mean, you gotta have a realtor that knows the area like the back of their hand. Like
yeah,
if you personally don't know, then you gotta find somebody on your team or
yeah,
build a team. You go find a broker that's somebody you're
yeah,
comfortable working with, and they actually know the area.
yeah,
Because like Milwaukee, you go one block to another block. I mean, one
yes,
block may be fine, but then you cross the street and you're like, damn, I
yeah,
don't know what's going on here. You know? So it's like that. It's like that. So
yeah. So you're a realtor
yeah.
too, right? So we could reach out to you if we want to know
Yeah,
about.
I'm a residential realtor, and I do help investors buy properties. I've helped another member on the home Facebook group buy an investment property in
Okay,
Milwaukee area. So
okay, that's awesome. Let me see. Key Vang says, which lender do you use? How much is your total asset worth? How do you like your steaks cooked? So let's start with the steak. How do you like your steak cooked?
I would say medium rare.
All right, me too. Awesome. All right,
Yeah,
just as long
yeah.
as it's not well done, we're good. We're good.
Exactly. Yes. Yep.
All right. So, which lenders do you use right now?
So if yeah, I mean, he's talking about my own personal deals. Well, we said that I had basically used personal funds to fund my deals.
Mm-hmm.
But basically, when I refied with it was a credit union, a local
Okay.
credit union,
Local.
and it was very good terms. Basically, I got a HELOC,
Uh huh.
and it was like crazy. It was like 2% for two
Oh.
years,
Oh
and
man.
then after that, it was just prime plus 1%. And at the time when it was 2009, it
Yeah.
was very similar to what it is now. So it was like low.
Oh
So,
man, that's really good.
yeah,
Um.
yeah.
All right. Next question. Chai Xiong asks again. Who helped you along the way? Along your
Um,
investment. Yeah.
yeah. I mean, when I first started, um, I wouldn't say like a certain person or anything really, but I read Rich Dad Poor Dad. Of course,
Uh. Yeah.
everybody knows that book. Hopefully,
Yeah.
if you don't, go read it.
Yeah.
I did post it up. I
Yeah.
did post
Yeah.
it up on the Facebook home group, so you can
Yeah.
download it yourself and read it.
Yeah.
But I read that book, and it really changed my mindset, and that's kind of what helped me jump into the real estate thing as well.
Uh huh.
The whole was it four quadrants?
Yeah, yeah,
Um,
yeah,
yep. And then as far as like I think that book really helped me, and then just listening to podcasts and being educated on all the different topics of investing.
yeah, yeah,
And you just find people that are knowledgeable, and you kind of follow them. Like you just follow them. You follow their podcasts, and you go to their events. You go to conferences. You go network, really, and you make connections. So
yeah. Can you share with that who's sort of like the big who's your multifamily guy that you follow or a
oh,
few?
there's a bunch right now. Everybody and their brother has a podcast right now, right? So, but
Yeah.
it's kind of oversaturated. It's crazy. But
Uh
the first guy I went to, the conference I went to was Rod Cleef.
huh.
Um, he's an interesting dude. He's a great guy.
Uh
Um,
huh.
and Michael Blanc,
Yeah.
uh, and also the Old Capital podcast,
Oh yeah, yeah.
really
Michael
apartment
Bach.
focused, really
Yeah.
great. Um, there's some other guys like
You know what? You know
I
the
don't
old Capital podcast. You know they actually have
yeah
like they actually do some sessions where they actually go through the underwriting process. Like it was really interesting when I actually listened to it. I was like, I mean, and you know they went through the slides and everything. What you need to essentially,
yeah
qualify, right? And because
sure yeah
yeah, yeah, because these guys they're the one that they're the broker, they're the
yeah
loan
commercial focus.
brokerage that yeah mortgage firm yeah that helps you out.
Mm-hmm.
So
Yeah, they're awesome. It's a
yeah.
great resource.
Yep, yeah. So that's awesome. I was just at a Michael Blanc event, I think like 4 months back or something like that. So I
Okay.
met a lot of
Yeah.
people over there too.
Yeah.
Let me
Yeah. I
see.
took that in Michael Barnes too.
Oh, yep, yep. Let me see. Zhang, Og Lee says, I don't know if it's Og or okay. Lee says, how long did it take you to obtain your 100 units? So how long from deciding to do multifamily before you jumped into these syndication deals?
I would say 10 months.
What is it?
10 months.
Oh, months?
10 months.
Oh, 10 months. Oh, okay. So it's a slow process. It's not like I decided that tomorrow. Well, because you spent the time to vet all the sponsors, right? Like kind of follow the sponsors.
Yeah. I mean, I spent the time to educate myself. I
Yeah.
went to, like I was telling you, I went to a lot of conferences. I went to Radcliffe's conference. I
Hmm.
went to two of his conferences.
Yeah.
Um, and you really learn about the differences between multifamily investing and residential. Like we were talking about the
Yeah.
commercial differences, the how do they evaluate each other, and
Yeah.
you really want to. I'm an engineer, so I gotta know everything like inside and out before I decide to do something. I'm not just I'm not really a person that just jumps out of a plane and then builds your parachute on the way down.
Yeah. Yeah.
Yeah, so I like to cross my I's and dot my T's, or
Uh-huh.
whatever. And
Yeah.
oh yeah, I spent a lot of time learning. I went to Michael Blank's How to Underwrite Deals event,
Hmm. Oh,
and I really wanted to understand everything inside and out before I jumped in. So
okay. That's cool. That's good. Let me see. Chalky Moore says, how do you manage the 100 units? Do you have to run around to collect rent every month? I know we talked about this, but let's re-emphasize that.
sure, yeah.
Yeah.
So with the 100 unit there, like the apartment that we have in Dallas that I'm invested in, we have a on-site property management company. It's a third-party company. Basically, the general sponsor hires them, and the general sponsor manages them, makes sure they're doing their jobs, collecting rents, finding tenants, screening tenants, all the daily activity. So
Yeah.
I'm basically hands off. I don't do anything. I just read I get monthly reports, and uh, when it's good, I'll get a check every month, and I'm like, all right, cool. I just deposit to my bank, and I'm like, all right, awesome.
All right, that's cool. Let's go to some of the questions that some people ask on the live stream. So, um,
All right.
Mikea says, how do you finance your property, which you talked a little bit about, but how far is how much so far into your investment? Oh, maybe she's asking how far is your farthest investment. So do you stay local
So
or what's with
I
these?
would say the one in Dallas. I have the 92 unit in Dallas, but I don't do anything with that one. So
Uh-huh.
I mean, I yeah, I have no responsibilities with that one. But then I do have the a 12 unit apartment that my partner and I bought, um,
Uh-huh.
and that's in Toledo, Ohio. So that would be my farthest one that I
Uh-huh.
actually deal with. So
So with multifamily, it's really anywhere in the U.S. At least in the U.S. Right? It's not.
right, right,
Yeah. You don't necessarily have to stay in your backyard, right? For multifamily.
correct. Yeah.
Uh-huh.
Yeah. I mean, like you were asking me earlier about Chai was asking earlier about would I invest in Milwaukee market? Well, not necessarily. It's not my primary market, but
Uh-huh.
just because of proximity, it's my backyard. I would look at it and I stay on top of the market. But with multifamily, I mean, you got to go where the numbers make sense and wherever that takes you. So
Yep. Let me see. Oops, I think I went back. Yeah, that I think that's the to me that's something that attracted me to multifamily too, right? It's an investment asset that you don't necessarily need to be there, you know. And you could kind of do it with single family as well, but it's just
yeah,
not as efficient, as multifamily in terms of like you could live anywhere and still invest, right?
right,
And the main part of it is that you have all these professionals that you have to work with. You can't do it yourself, so you have to hire all these professionals, like property managers or these asset managers or all these contractors, to come and do the work because you can't do it yourself anyways, even if you want to. Like, yeah.
exactly. Yeah.
Okay.
So
I think that's all the questions. That they have
sounds
on
good.
there. If you guys have more questions, go ahead, leave them, and I'll try to get them to Lore, to answer them at a later time. And maybe when he do his own syndication, he'll come back and let us know about your syndication. Yeah.
Right. Yeah. Yeah, yeah. I'd say, if anybody has a question for me, just, reach out to me on Facebook or email me.
Uh huh.
My email is just my name, Lor, Lor,
Okay.
Vang, V at gmail.com. So,
Okay. And you're on Facebook too, so
yep, I'm on the Hmong Facebook group.
yeah.
Just looking up there as well.
Okay. All right. I'll put all your information on the descriptions too. So if people want, they could reach out to you, and I would say you guys should reach out to him. Use Laura as a, I mean, he spent like years, doing single family and then learning this multifamily stuff. So why not just like, why start from zero when you could like take what he learned and then build upon that. So I'm gonna
Yeah,
continuously be bugging Laura. So you guys should too. Um,
no problem. No problem.
yeah. All right. What else do you do other than real estate? Uh,
Uh, well, I'm a father of three kids, so that pretty much keeps me busy. But
hmm
basically, I'm a sales engineer, and then I'm a realtor.
Yeah.
And so when I'm working my sales engineer Monday through Friday, and then weekends I'm doing realtor stuff.
Yeah.
And in between all that, then I'm looking at apartment stuff and trying to find deals. So don't really have a lot of time.
I find that the successful people they keep themselves busy. So like whether they still stay at their job or they're doing things on their
Right.
own, they constantly have something to do. Um,
Yeah. Yeah.
all right. All right. With that said, what do you do for fun then if you don't have time?
For fun, I mean, my wife and I, we do like to travel. We like to take our kids, so we've been dragging our kids all over with us now.
Uh
They like
huh.
to go as well. So right now we took them, like their last trip was New York City.
Uh huh.
Took like
Is
three
that the
kids.
one where you went to that the stairs thing that we were talking about earlier?
Yeah, yeah, that's the one. Yep. We went
Yeah.
to what is it called, the Shell, I believe,
Yeah.
or
Yeah.
yeah, it's in
Uh,
Hudson Yard.
yeah. Yeah. How was that? Like they, I mean, how does it look? Some people say it looks ugly, but what's your thought on that?
It looks like a pine cone. Yeah, like a
Yeah.
golden pine cone, something like that.
Uh,
That's all right. I mean, it was free, and from the outside, the thing looks cooler than being on the inside,
oh. Yeah.
especially you don't have to walk all the stairs up to the top. So
Yeah, they're all stairs, right? Do they have?
Yeah, there's stairs, but they do have elevators. I believe there's one elevator for
Uh-huh.
people who can't stairs. But yeah,
Oh,
no chance that we're gonna wait in line for that. So
yeah.
we made all our kids walk up the stairs.
Yeah. Well, I mean, the
Yeah,
point of that is to check out the stairs too, though, like to so that you get to see different views. So that's
yes,
that,
yes.
that's on my play. That's one of the places that it's on my list to go visit. So
Yeah,
uh,
yeah.
all right. What I mean, I usually ask these questions. What's a book recommendation that you would give to someone that maybe is starting out in their real estate career?
Um, I would definitely say, Rich Dad Poor Dad, of course.
Uh-huh.
But if you wanted to learn about apartments, the best book I can recommend right now is actually titled The Best Ever Apartment Book.
Uh, that's Joe Fairless.
Bill Willis's book. It's like freaking like 500 pages. I mean, sure, it's like the font's like probably bigger than it's supposed should be, but uh, it's a very detailed book and
Yeah.
it's quite expensive. It's like $50, but
Uh-huh.
that book, if you're the type of person that wants all the instructions and how to do it, definitely pick up that book.
Oh yeah. Man, I need
Yeah,
to. People have been telling me about that. I need to read that. So
yeah,
that's
man.
that's
That
gonna be
book's
on my
worth it.
reading list.
Yes,
Uh,
yes.
all
I'm sure you can
right.
borrow from like.
Yeah, yeah. All right. Anything else you want to share before we go? I know that we went over time, and so if you want to share anything, any last tip for anyone that wants to do real estate, especially if they want to move into commercial and multifamily real estate. Any last advice or tips you can give them?
Yeah, so just generic advice for me would be whatever you want to do, um, have focus. Uh, you know, there's so many different people always come up to me because they know that I invest and stuff, and I post a lot of investing stuff on my Facebook, whatever. But people reach out and message me and be like, "Hey, I want to do real estate. How do I start? Where do I start?" And I suggest that they go to like a source like Bigger Pockets or whatever to learn about all the different methods that you can invest because it's
Yeah.
crazy, right? It's not just buying a house. You can buy and hold, which is renting.
Mhm.
You can do flipping. You can do wholesaling. It's like infinite, right? You can do multifamily. But whatever you want to do, first find out what you want to try and just focus on that. Don't be like, oh, hey, I want to flip and I want to like do this and do that because you're not going to be an expert at you're not going to do anything well,
Yeah.
um, so for me, I was kind of the same dilemma. After having those rentals, I was like, well, what am I gonna do next? And I really got lost a little bit where I want to do wholesaling because I was like, yeah, man, maybe wholesaling, get some
Uh-huh.
funds, fill up my pockets first before I go and do apartment stuff. But
Yeah.
then I want to do apartments at the same time. But just for me to learn how to wholesale, dude, there's so many. It's ridiculous. It's like
Yeah.
you got to go like put up signs and bandit signs and whatnot, and then set
Yeah.
up all these calls and talk to people. Like, man, who has time for all that? you know, like I don't have time for all that. And if my ultimate goal is to be able to do apartments, then why not just to do that today? And
Yeah.
that's when I decided, hey, the hell with that. I'm just gonna do apartments, and that's
Yeah.
it. And so I spent a whole year just learning and doing all sorts of things. And within that year, I had accomplished my goal of getting apartment investing. So I would say just focus. Be focused.
Yeah.
Find out what you want to do, and do it. And don't just put the blinders on. There's so many shiny objects. You got people like
Yeah.
Chai. Oh, Airbnb. Like yeah, that's great. Whether you want to do Airbnb, like go for it. Just do that. Don't
I've
don't
been
don't.
interviewing. I've been interviewing a lot of people, and everybody had different strategies. And every time, I'm
Yeah,
like,
yeah.
oh man, I should go do that. But yeah, I'm still.
Exactly. And then you got other things like what's it called? Assisted living homes.
Yeah.
It's like,
Yeah.
yeah, you make tons of money, but it's like people are trying to do too many things at once, and it's
Yeah.
like pick one thing, just learn about it.
All right, that's true.
Yeah,
I'm gonna take that advice too. So
yeah, yeah.
that advice.
Right. So That would be my advice.
Yeah.
Just stay focused, laser focused.
Yeah. All
Yeah.
right, cool, Lor. Thanks a lot. I learned a bunch of things. I'm gonna rewatch this for sure because I'm in the multifamily space, so you definitely gave a lot of info and recommendations from me specifically to think about, and hopefully our community can pick up on some of their tips and tricks as well, in particular to multifamily. So thanks a lot, man.
Yeah, no problem. Thanks for having me on.
Yeah, so yeah, I'll put all your information on there, and if people reach out to you, can you let people know how they can reach out to you again one more time, and then we'll leave it at that.
Yeah, yeah. So basically, you can reach out to me on my email, which is just my name, Lor Vang at gmail.com, or just find me on Facebook. On the loan group, and I also have my own Facebook investing apartments group, Milwaukee Apartment Investors. So search those up and join me, and start learning about syndication and multifamily.
Oh, cool, man. Thanks. We'll leave it at that, man. Thanks.
All right.
Yeah,
Yeah.
I'll see you
Soon.
guys. Yeah, thanks, Lord.
Yeah. Bye.